Hello everyone. This is a presentation based on the topic of tax havens. Generally, on hearing the word tax, one thing that comes into our mind is that we have to give certain amount of money based on our turnover or income. Whereas tax havens means a country or an area where taxes are charged at a low rate or sometimes at a zero rate. Hence, the primary motive of tax havens is to pay zero or minimum taxes. This presentation is presented by Anusha Gupta. In the corporate world, it is common to hear news related to taxes. Similarly, sometimes back, news related to Starbucks, Google, and Amazon.com circulated on media. So, stating that Starbucks, whose domicile is in UK, in spite of having Euro 398 million as its turnover, paid zero corporation tax in UK. Another giant company, Google, whose domicile is in Ireland, paid only Euro 6 million as UK corporation tax, in spite of having Euro 2.6 billion as its turnover. And another famous e-commerce company, Amazon, whose domicile is in Luxembourg, paid zero payment as UK corporation tax, in spite of having a turnover of 3.3 billion. Due to all these, several protests took place in respective places because this is a bitter method which giant companies adopt to save tax payment. After listening to all these news, you must be wondering what does this tax haven actually means. So let's decode it. Simply, it is defined as a country or place which charges very low effective rates for taxation. It is offered to all, whether individuals or companies, especially to the foreign ones. It is so because no tax will attract the foreign companies to get their companies registered in those countries and pay nil or low tax and live there for longer time. Don't you think that this must be in practice ever since trading among countries started, or do you think it is recently developed term? So, to know the history and origin, let's go through some points related to it, which are as follows. This term, tax havens, was firstly considered on the Heinrich paper by James R. Hines back in 1994. This paper is the most cited research paper on tax havens ever since today. Earlier, Hines simply defined this term as a group of countries with low tax rate, but in 2009 he reaffirmed this term with Dhamika Dharmpal, an economist, simply stating these are small well-governed state countries imposing zero or low tax rate on a foreign investor. After understanding the term, it might seem to be very attractive as a way to avoid tax payment. But wait, this has some consequences as well. Therefore, pros and cons are as follows. Some pros are zero or low tax, hiding of personal financial information to a great extent. Local presence is not necessary, which means foreigners are also welcomed. Less procedures to incorporate a business. And lastly, lack of transparency exists. On the other hand, the consequences are also there, which are as follows. Effect of political economical instability in the country. Other costs such as paperwork and operation cost may be much higher. Existence of legal consequences such as poor law, encouragement to illegal activities, and lastly, partiality in applicability of laws on different companies in different ways. So, how does a tax haven actually works? You wouldn't have imagined that it is that simple. Therefore, the process is as follows. Basically, this concept works on making of a shell company, and to do so, firstly choose a tax haven, which may be any country as per your preference. Then create a corporation or say a shell company there. Then hire a nominee who can be the resident of that country or any other trustworthy person to run your affairs. Then open a bank account there. Then just transfer or move the money earned by company in that bank account opened in the tax haven. And lastly, spend the money as you want. This can be seen in the image given. So basically, the company in the tax haven will be the holding company and others will be the subsidiary. And hence, the holding company will be liable to pay tax at a low rate or sometimes zero rate also. Related to tax haven, some other terms also exist, which is financial secrecy. Financial secrecy means a conditional agreement between bank and its clients that all the information will be kept secured, confidential and private. Also, some countries are there which have high tax rate but due to so-called lack of transparency, they are treated as tax havens. For example, Switzerland, Hong Kong, etc. The data in the image beside shows the Financial Secrecy Index 2018, which is topped by Switzerland and USA. USA, in spite of a powerful nation, ranks second in this chart of transparency issues. So, after going through these many slides and discussion on tax haven, can you guess any two or four of such places which you have heard before or have heard in this presentation? So, if you haven't guessed it, let me tell you top 10 tax havens in the world. The Bahamas, because no personal income tax, no capital gain tax. Luxembourg, because existence of plenty of shell companies. Bermuda, because no income tax, capital gain tax and transfer tax. The British Virgin Islands, because plenty of offshore companies and no tax on capital gains and transfer. The Cayman Island, because it's a center of offshore banking systems. The Channel Island, basically Jersey, because no tax on capital gains and non-residents are free from paying any kind of tax. Hong Kong, because low rate taxes and no capital tax. Mauritius, because tax rates are very low. Switzerland, because low tax rates and famous for offshore banking. And the last, the Isle of Man, because no corporation tax, no capital gain tax and no wealth tax as well. Before you assume that this is so fancy, wait a minute. Tax havens are not so safe or so heavenly always. Reasons being some scandals that took place. Scandal number 1, the Liechtenstein banking scandal that took place in 2008. This happened due to leak of the personal data of tax evaders and came into light when Germany started a series of tax investigations based on leak of bank account details sold by a bank technician. And scandal number 2, the Panama leak that took place in 2015. This was a case of huge scandal in which around 11.5 million files of data were leaked from the database of Mossack Fonseca, that time's world's fourth largest offshore law firm. The leak paper showed that working of tax havens clearly and how it helped to evade tax easily. Recently, in 2017, one more similar scandal happened, named Paradise Paper Leak. Hence, it is important to understand how is a country categorized as a tax haven. Therefore, there are some key attributes which you may consider which are as follows. What is the rate of tax? Is it nominal or zero? How much is the data kept secretly? Level and lack of transparency exists or not? Is local presence required or not? And how can one do his marketing from being there in the tax havens? Other than basic points, there are some socio-economic factors to be considered to categorize a place as a tax haven, which are as follows. The political and economical stability of a country. How easy are the exchange controls there? Formation of treaties and agreements, the corporate law of the country, availability of communication and transportation facility there, other banking services in the tax haven, and suitability of the location of the tax haven, say the country or the place. Let's now discuss some of the top companies that derive benefit from these tax havens. Information has been taken from the source mentioned below. These companies are alleged to do so. First, it is Apple, uses Ireland as its tax haven and has booked a huge amount of hundreds of billion dollars. Second is Nike, the sports brand, uses Bermuda as its tax haven, which has booked an amount of $10.7 billion. Third is Goldman Sachs, the banking company, uses Bermuda as its tax haven and has booked around $28.6 billion as its savings. Other companies are also there who have saved around $1.6 trillion using these offshore systems and tax havens. Some of them include Microsoft, IBM, etc. Now, let us see how much have Apple saved from this tax haven system. Source of information is mentioned below. To understand, see the flowchart given. All the profits from around the world are recorded in Ireland, Apple's tax haven country, where effective tax rate is 0.005%, which means almost no profits is taxed in Ireland. Subsequently, all the profits are allocated to head office, which exist on papers only and hence remained untaxed. And hence Apple succeeds in saving huge amount of tax, and the amount is transferred to Apple Incorporation in US to finance research and development process. After learning all about tax havens, that is its meaning, origin, working and famous places known as tax havens, it is the time to conclude all these. Some points are as follows. There are both positive as well as negative effect of it. Variability in tax rate leads to competition among countries to lower their tax rate also. For short term, this method is okay, but sometimes this strict secrecy of information may lead to money laundering or other illegal activities to take place at a large pace in long term. To jump into tax havens, tax evaders needs to take caution in doing so due to crackdown of some of the scandals in this field. At last, we come to the end of this presentation, and these are the websites referred for all information described here. Do comment if you have any doubt, and thank you for watching this.